IVM.
Welcome to another week on IVM. It's been a great week. If you aren't following us on social media, please make sure that you are. We're IVM Podcast on Twitter, Facebook, and Instagram. On Cyrus Says this week, Cyrus is joined by actor and comedian Gaurav Gera. They talk about Gaurav's journey in showbiz and the inspiration behind his Shopkeeper Behenji sketches. On Simplified, Naren and Shrikant are joined by guests Avanti and Zain from the Marvel's Lost and Found podcast. On Geek Fruit, Tejas and Jishnu give their take on Ant-Man and the Wasp and discuss the future of the Ant-Man verse. I'm really looking forward to that. That was a great movie. On Varta Lab, last week, founder of IVM himself, Amit Doshi. Hey, that's me. Talked to Akash and Naveen about being Amit Shah's doppelganger, my journey so far, and how he started an IVM podcast. I'm sorry if that grammar was twisted. On Keeping It Queer this week, we have the producers of Vice's latest web series, Sex Rated. And with that, let me take you on to your shows. Welcome to episode 63 of Shunya One. We're joined by Vikram Chachra, founding partner at 8 Innovate VCs. The conversation is a really interesting one. We focus a lot on mobile payments, and Vikram's been involved in a whole bunch of different areas in that. So we talk about payment applications, personal banking, and a lot of other conversations around the fintech space. Also, we've had a lot of interesting stuff happening on Slack. In the last episode with Sanjay Nath from Bloom Ventures, he mentions how he thought that finding a co-founder is the single most important thing that a founder can do. And we ran a poll around that. And 80% of our respondents agree with him. So I guess if you guys are looking to start a business, you should find a co-founder fast. And please participate on Slack. There's a lot of stuff happening over there. And let's get on with the show.
All right, welcome to today's show. We have with us Vikram Chachra, the founding partner at 8 Innovate VC. Welcome to the show, Vikram.
Thank you, Shiladitya. Delighted to be here.
Thank you. Thank you for making it on this lovely Bombay monsoon day.
It is indeed quite delightful.
But thankfully, when the rains start early in the day, the roads clear up. So I think...
That's true. Actually, traffic was not bad today.
Correct.
Yeah.
Because everybody stayed home.
Yeah.
Exactly. But being, of course, a VC, your job is always on. So why don't you give us, our listeners, a little background on how you came to be where you are through your journey of being a founder before, and then, of course, now angel investor, and now running your fund.
I've been building and funding internet companies for about 2 decades. So you can say I'm like a child of the first .com crisis.
Yeah.
Started my first company in 99, which was a mobile payments company. Very early.
In 99? Hold
Yeah.
on. That's like pre-Symbian too.
Yeah.
Okay.
So that was in New York, London. It was a global company, very early. And after that, I was in the Silicon Valley with another company called Snapfish, which we helped to turn around, and we sold to HP.
Snapfish is a photography company.
It was the first photo sharing success story,
Yes,
one of the first, yeah. So I would say, if I look at my career in the internet space, I would say I was building apps, one of the first few smartphone apps, in the pre-iOS and the pre-Android era.
Wow.
Very, very early. And after that, taking a small break, I've been funding, you can say, app companies,
Right.
largely mobile-first companies,
Right.
since 2007.
Wow.
Yeah.
And what was the difference way back then and all the way now?
A few things haven't changed. I think I'm still surprised that we've not been able to automate software development to the level we should have, right? It's still artisanal, if you ask me.
Yes.
So software programmers were always in demand. It's continued to be in demand to that extent.
Yeah.
I think raising money was easier that time.
Yeah.
Well, everybody understood the value of the internet.
Right.
Everybody understood the value of the mobile internet.
Yeah.
We just didn't realize how long it's going to take to get here.
Yeah.
That's it. So a lot of the things you read about today in TechCrunch or wherever, oh my God, this is a revolution. We already knew it. It's going to happen. What shocked me is how long it took to get here.
And are you talking from a global or India-specific context now?
Global.
Global, right?
Yeah.
So even globally, it took a way long time to get here. Or maybe that's because the .com bust sort of stopped people in their tracks. And I asked because you saw it firsthand.
See, one thing I realized through this career is that good news takes its time.
Mm-hmm.
Bad news comes early.
Yes.
Right? And so, you have this whole hype cycle. Gartner made something on that. So, initially you have euphoria like you're seeing in the crypto market.
Yeah.
And then you have this, certain realization that, the emperor's not wearing any clothes.
Yeah.
And in this period of time, downtime, then, the true passionate believers, they start building products and services. And that's how you have the edifice of the next generation of technology being built. So I think that happened starting in 2001, 2002. I think what really happened at that time was there was also a massive telecom crash, if you would remember.
Yes.
And fiber optic companies just went bankrupt. And their infrastructure was picked up by the existing incumbents very, very cheap.
Yes.
Oh.
Which allowed broadband prices to plummet. So this is it's a very demand elastic thing, telecommunications. We're seeing it with Geo, right?
Mm-hmm.
So broadband just took off. And when broadband takes off, we've seen this in the US, we saw it in China, and now we will see in India. There is a period of 1 to 2 years when people are getting used to content. So first we come to communicate like we do on WhatsApp, Facebook. Then we start consuming content. You're streaming video today, maybe listening to music that time, reading news. Then we begin to transact because we are comfortable.
Right.
Right. That transaction jump has not yet occurred in India.
For mobile. For web? Maybe
Yeah.
so, but we're leapfrogging web maybe.
I don't think there's much of a desktop market here anyways. Right. Everything is on the web, on the phone.
Right.
So I think we've gone from, like I was just looking at the numbers, pre-Geo, December 2015, we had 100 million broadband users. Mm-hmm. This is on the TRAI website. We are at 397 million right now.
Wow, 4x, yeah.
See, that what was happening is people were not turning on broadband on their phones.
Yeah.
Because they were afraid, they'd lose all the...
And you'd wind up getting some crazy bills and stuff like that. That used to happen on a fairly regular basis, right? So, I remember, what was it? It was like, if you didn't have a plan from Vodafone, the actual effective rate per MB was something like $1,000.
Wow.
In India, this is not roaming or nothing. It was, they used to do this kind of silly 10 kilobytes per kind of this charge.
Yeah.
And it worked out to like $1,000 a megabyte.
Wow. No, so obviously telecom as a base is the enabler for all things the internet, right? But in your experience, right, looking at these two eras of innovation per se globally, how the dot-com boom and bust sort of catalyzed all these bunch of companies who are now brand names and household names, whatever. The pre-2005 era, and now the mobile and the new age companies. And of course, now that you're also investing in all of these new age companies last 5-7 years. You were an entrepreneur yourself back then. You're an investor now. Has your thesis changed, or has there been a thesis?
See, I'll tell you, that time the cost of starting up an internet company was about $650,000 to $750,000. You didn't have AWS.
Mm-hmm.
Right?
Uh-huh.
So you had to buy a Sun server. You had to buy Oracle licenses. That'll set you back by like $600,000-$700,000.
Yeah.
And then you had to go find somebody who'll host it for you. Will charge you $15,000 a month.
Wow.
So if you didn't raise $1 million of seed funding, good luck. Right? Now, you don't just need a laptop, and AWS will give you free credit.
Yeah.
Right? Or Azure, whatever. So I think the barrier to entry has gone to zero for starting up.
Right.
Right? So it's not just about ideas. Can you execute the idea? Mm-hmm. I think so to that extent is amazing, for the whole internet economy. That anybody who can come from anywhere with a great idea and, get going. I think so. You can say we've seen Moore's law work on the technology side.
Right.
We found marketing becoming more and more expensive.
Yeah.
Right. And that's also because some people have monopolistic control, like Facebook.
Right.
They've just hiked their rates dramatically. Right. So they made customer acquisition really hard.
Right.
So I think we'll go back ultimately to building brands versus acquiring customers. Yes. Yeah. That shift will happen. Mm-hmm. Which is, very few internet brands are like seminal brands, There might be a Google or Facebook. In India, I think Paytm became a brand because they sponsored IPL.
Right.
Other people would have spent 100 million just acquiring customers off Facebook, and they can die and they can go away.
Right.
Right. So I think that kind of realization is beginning to occur.
Right.
But I would still say that in India, we're in very early stages. So if you're playing an IPL game, if this is the whole thing, we are pretty much in the first 5 overs.
Wow, that's an interesting analogy.
Yeah.
What have you seen coming specifically to the kind of investments you've made over the years, and of course your fund is looking to make also? What made you start investing in Indian companies?
So, I moved back to India in 2006, and I was running a late-stage private equity style fund. And I was doing this largely for fun, right? Also very passionate about the space. I think that time I remember 2007 when I wrote my first check, there were 10 million desktop users in India.
Wow.
Right. And the first check I wrote to was for Carvale.
Right.
And people said, well, you're nuts. I'm like, why? It's like, how many people will buy cars? Look at online, and this is a poor country, desktop users, blah, blah, blah. All those things that, people will talk about when they see an improbable story.
Right.
Right. But, I always bet 7 to 8 years out.
Right.
And I like to bet on very early ideas because there's no competition. So the more improbable the idea, if they can deliver dramatic gains in productivity to somebody, I think people will adopt. I've always believed Indians are very practical.
Right.
Right. They are time vasool and paisa vasool.
Correct.
Yeah.
And I think so. The view I've always taken is, are you dramatically reducing friction in the life of the Indian customer? Right. Because we live very friction-fraught lives here.
Yeah.
So anything we can do to digitize, a user journey, I think people will respond and they will adopt.
Interesting. So from Carvale, which was, in a certain era, it was one of the disruptive notions. And I think you earlier called them like that category of companies, the digital classifieds or the digital,
Actually,
discovery tools.
I think we spoke about that offline. Can you kind of walk people through the classifications that you were talking about outside? The discovery versus distribution versus...
full stack.
Yeah, the full stack.
I try not to have like a fixed view on a specific sector. I think every sector is ripe for disruption. I think customer journeys in all the sectors completely suck, right? In fintech, we've seen the government actually being a major disruptor, solving the KYC and, payment problems with the UPI.
Right.
But generally, the way I tend to break it out is that I say, okay, what's the customer journey? The first mile is acquiring the customer, signing on the customer to your, application or your service, doing KYC if necessary. Then that's the first mile done. The middle mile is delivering the service or producing the service, right? If it's a bank, then, the balance sheet, that's the middle mile. If it's Flipkart or Amazon, it's probably the middle mile sitting in China. Right. The last mile is basically about delivery, payments, customer service, return. And then, if you have good customers, you repeat the whole cycle, right? So how can you essentially optimize these customer journeys so that you reduce time, you reduce money involved for the customer, reduce the friction essentially, and also can you deliver joy?
Right.
So we're beginning to see now Indian founders shift from, I would say, friction to also delivering joy. Interesting ways.
Yeah, because they've gone to that full stack there, right? Just to add to what Amit was asking, right? So the first few internet companies, including the ones you've invested in, the first era of Indian internet companies was this discovery tools set, right? Even today, if you go back to Zomato when it started out, was discovery. Everything was about discover, find, and then go do whatever you want to do with that information once you find it, right? It was lead gen, or rather, it was in a lot of ways.
I mean, look, even Google is the world's largest information broker at the end of the day, right?
Correct, exactly, right? But then over time, as trust with the customer developed, lead gen companies gave way to more going deeper into the customer's experience, like you were just explaining, right? So the middle mile and the last mile delivery and so on. And now we are at a stage where there are full stack companies showing up. So how have you moved your bets accordingly, or have you, in terms of what kind of disruptive ideas you've put backed?
Yeah, I think we began to see the emergence of, I would say, 1.0, as you said, were all in, information brokers, lead generators. 2.0 for India was really first and the last mile. Right. So I would say, for example, Swiggy is a great 2.0 company.
Right. Yeah, there you go.
Right.
They acquire the order and they do the delivery. I got you.
And the reason they were able to get so many customers is because they had their own staff to deliver. So there was predictability, and you could see on the app when the delivery will happen. Now, nobody thought that's a big deal.
Right.
In fact, people were like, why would you even do that? It's too expensive, but that's how you got the customers.
Correct.
Right. Now, I don't know whether Swiggy should have its own internet kitchen or not. I don't think so.
Right.
So maybe you don't have to go full stack all the way.
Right.
Ultimately, so it's turning more into a logistics company. That
Correct.
point. But when you look at some spaces, especially like fintech, I think there's huge opportunity to create amazing full stack companies there.
Mm-hmm.
Because many financial products were never designed for digital distribution.
Mm-hmm.
So for example, why can't I buy a mutual fund for 10 rupees? Because no distributor will distribute it.
Right, but digitally there's no longer a cost issue over there, right?
Yeah. So there are some markets you can just atomize completely.
Yeah.
Right, financial markets particularly, you can just atomize it. Why can't I open an FD for 10 rupees?
Right.
Why do I have to go online, go somewhere to break it? I think all of this will kind of go away because we're just moving bytes.
Right.
So fintech is an area I feel which is really interesting because there's so much friction in this country.
Correct.
And with this KYC problem being solved with Aadhaar, right, and the payment problems being now slowly getting resolved with UPI, with GST coming, I think you're going to see some remarkable stuff happen in this space.
Yeah, so the regulator has finally allowed you to sort of build on top of these things. In fact, fintech has been an area of interest for you
That's right. Yeah.
over time, right? So what made you choose the fintech bets? And like can you tell us a little bit about the ones you chose and why you chose them?
Yeah, so I started my career as a Wall Street trader in London, right? And so my background is in finance. I'm actually not an engineer, right? So I started as a Wall Street guy. The first company I started in New York was a mobile payments company. So I would say that, and I've been running this late stage fund for the last 10 years. So I sort of live on the intersection of money and finance, money and technology, right? And the first fintech company I joined as a seed investor was EasyTap.
Oh, yeah.
Which is one of the first mobile POS companies.
Right.
And when we invested, our thesis was very clear that everybody had debit cards.
They just didn't use them.
No, there was no way to use them. There were 650,000 terminals across the whole country.
Yeah.
Right, which is ridiculous. So you had to go to a fancy store to use it.
Right.
So we're like, okay, and these terminals, they cost a bunch of money.
Yeah.
So here's an opportunity to fund somebody who's going to do low-cost devices. I actually thought my Fruitwala will be using it.
Yeah.
Right? But it didn't happen because the KYC from the bank was so tedious.
Right.
It used to take weeks and weeks and weeks of KYC from the bank to enable this guy to have a machine.
Oh.
So because of that, we funded Signsy, which is a digital KYC company, which focuses only on doing digital KYC today for banks. They can do it for tomorrow, but they've actually created an amazing business around doing digital KYC for onboarding companies, onboarding merchants for banks. They've got all the top banks in the country as their customers in 18 months since we seeded them.
Wow.
Right? So they've shrunk time from 3 weeks in some cases to 2 hours.
Wow, to issue a POS terminal or any other instrument.
They do it in 30 minutes for M-Swipe.
Wow.
They do it for 30 minutes. M-Swipe is now focused on, it's a competitor of EasyTap, on the Kirana store market.
Correct, yeah.
So they've reduced their time from 2 weeks to a few hours.
I just used a terminal. Someone came to deliver something and they used a card on delivery terminal. So yeah. Interesting. So, and that's where, of course, you saw that there's so much, fintech has been I've been taken a personal interest to fintech earlier as well. And I know that it's just so hard to move money around in any sort and form, right? Whether you're a business or a person moving money. Is that, obviously there's an opportunity there, but when do you think the tables turn finally? Visit with the recent most developments around the government finally stepping in, or do you still think there's a barrier which hinders progress in fintech?
Look, the demonetization was a huge stimulus.
Right.
Stimulus?
For fintech.
Digital stuff.
Really? Okay.
Yeah, that's what really pushed adoption.
Okay.
Right? There's no cash.
Correct.
Right? How are you going to make a payment for 50 rupees?
Correct.
That's when my 70-year-old uncle downloaded Paytm.
Right. So that mindset change in the Indian consumer was only possible when this sort of a big...
And then obviously GST. So I would say that, everybody knows India is very heavily underbanked.
Right.
Credit penetration is really, really low.
Right.
But even today, most, for example, people who are launching startups on the fintech lending side, they still want to lend to only the salaried class.
Correct.
So instead of, lending to somebody who's, where the minimum cutoff was, let's say 50,000, now some people are saying we'll do 25,000. Right. There are not too many people lending to, for example, freelancers.
Right.
Yeah, they don't. In fact, that's one of the biggest problems most people have. Like people who have no credit can never even get any. Like, where do you start? Right?
So I think all of these spaces are getting filled up. There are lots of, we have a portfolio company called SlicePay. It provides digital credit, sort of like a credit card, to college students.
Right.
Growing very fast. Okay. Interestingly, their bad loan numbers are very similar to people who lend to salaried people.
Yeah.
So, all these people who say, why would you lend to college students? Well, they need money.
Yeah.
Right? They get money every month or so from their parents.
Right. And they can pay back.
Yeah. So if you want to buy a smartphone and you don't have enough money, so you'll manage.
Right.
And you'll pay on EMIs.
Right.
So I think what's going to happen is, talking about fintech, look, payments has been heavily disrupted by UPI.
Right.
The government is making it literally impossible for
someone else to do payments.
Whether it's Visa, MasterCard, everybody's on notice. You don't get to make more than 30, 50 basis points now. They've actually capped it, right? Yeah. So the way the payment guys are making money, they're bundling credit on top.
Correct.
So you have a pay later option.
Correct.
So we are going to enter into this pay later world everywhere. You'll be able to buy a shirt, that t-shirt you're wearing. That's like, let's say 1,500 rupees. You say pay 500, pay the rest, in 3 installments. Yeah. That's where we are going. And they will instantly score you right there, your credit score.
Correct.
Right. So that's where it is, online or offline. Ultimately, you sort of the Bajaj finance model.
Right.
Then you'll start seeing even insurance coming on top of the stack.
Yeah.
Right. Occasionally where the context matters. So the stack is going to continue getting built out. And these bets have already been taken. So there are a number of companies, maybe they are in very early stages, which are doing that. So we've got MoneyTab that we seeded, which is focused on the consumer space. Yeah. SlicePay, as I mentioned, was in this. We actually got a very interesting company called Kyepot, Kyepot. It is digitizing chit funds. It's India's first digital chit fund.
Oh, really?
Yes.
Like personal chit fund, like
yes.
friend network.
You can download it and you can join right now.
Interesting.
That's very interesting, yeah.
So they partnered with an existing chit fund for the regulatory backbone.
Right.
And they're acquiring users and they are scoring these users and they enable you to, join a chit fund with as little as 2,000 a month.
Very interesting.
And they're going to disrupt a $50 billion market. That's the most conservative estimate of the money that goes in, that is in chit funds.
Right, yeah.
Probably it's in multiples informally.
Yeah. And this is, of course, something... chit fund is a word I know unique to us, but I'm sure the model exists elsewhere as well. But these are the outliers in the which the banks never even think of getting into, right?
Yeah.
No, this is a whole new domain of fintech, so to speak.
Yeah, so as I said, a few things are going on. One is this, this payment stack is getting bundled with credit and all these other things. The other thing I think that will start happening is what I call the atomization of markets. Right? There's no reason why my minimum subscription to a mutual fund is 1,000 or 100 rupees. Right? My mate should be able to do 10 rupee subscriptions every day.
Right, yeah.
And earn like differential paise or whatever.
Yeah. So I think you'll see atomization in every sense, whether you're buying gold, whether you're opening FDs, whether you're buying a share.
Yeah.
I should be able to buy a fractional share.
Right.
Why not?
Interesting.
So we are looking at all of these things. And so I think as an investor, in the internet has this very unique quality about going to full radical potential of whatever is possible. So if you're talking about atomization, you'll be buying, 1 penny worth of a stock. Right. And to the other extent, it can be, wherever it goes on the maximum side.
Right.
Nice.
And so that's what we look at when we are funding somebody. How far can this thing go? What if everybody uses it?
Interesting.
What's the impact?
Amazing. On that note, I think we'll take a quick break and come back, talk some more.
Hey, what's good, you guys? It's your boy Ranveer Alabadia from the YouTube channel Beer Biceps, and the Beer Biceps team is bringing you Hustle Science. Hustle Science is basically a show where we interview hustlers. We ask them about what made them legendary. We ask them about their success secrets. We go to the core of their legendary status in life. It's going to be hosted by my boy Tejaswin Gumber and yours truly, Ranveer Alabadia. Make sure you catch Hustle Science on the IVM podcasting app and website, or any kind of podcasting platform that you use to get your podcasts. Make sure you check it out. The episodes are going to be out every single Tuesday.
All right, coming back off that chat about fintech, I think one thing which I want to ask you about your concept of something you were earlier mentioning too, called the 5-minute bank. How does that work? And when do we actually get to see it?
Yeah, is it possible actually? Because I remember having to go to the bank like just a week ago and nothing happened in 5 minutes.
So, I'm a very impatient person. And so I was thinking about, I said, what if I could deconstruct a bank and put it back together and just digitize all these processes? Because we are just moving data, right? Yeah. We're not moving atoms. So I'm very fascinated with this human intolerance for anything that takes more than 5 minutes.
Very Indian intolerance also, I would say.
I think it's global.
Yeah.
First time McDonald's came along, I don't know if you saw that movie. He was able to make your food in a few minutes.
Yeah.
Right? So 5 minutes. They said, I'll see you in 5 minutes. Give me 5 minutes.
Yeah.
Then Uber comes and says,
5 minutes away.
5 minutes away.
Even
right?
if they're 20.
Right, exactly. And that's why you get upset. So 5 minutes is this cliff beyond which people go bat crazy.
Yeah.
Right? Now imagine what banks do to us. I want to give you my money and you're going to take weeks and weeks and weeks to open an account for me to give you my money on which you will profit. You want to give me a loan. You want to take my house as a mortgage. You want to basically buy my life.
Yeah.
And again, you're going to take weeks and weeks and weeks. I'm like, this is not going to work.
Yeah.
Right? So my whole thesis has been that how do we create a 5-minute bank? Conceptually. Mm-hmm. I think if you put together all our portfolio companies, we will get to there.
Nice.
Each of our companies is really about efficiency. Right? So Science is on the guts of this.
Yeah.
Trying to reduce the time for the first mile.
Yeah.
Right? All our companies, they're not giving loans to you in 5 minutes immediately, but they're all tending towards. They can all give you loans within hours, by the way, whether it's MoneyTap or SlicePay or whoever.
Wow. Interesting.
Yes. All of these companies, they are mandated to go in that direction. So this is how I look at it. I say, okay, can you do this financial transaction under 5 minutes? I understand you can't do it today, but is it within the realm of possibility for you?
Right.
And that's an interesting, angle to analyze a business opportunity.
Very cool. In fact, and that's, I think what you were saying earlier is that and it's happened progressively in fintech over the last so many years. And now we're at this point where we're building layers on top of a very efficient underlying digital financial system, which we'll only see more and more disruption in. But
sorry, I just want to kind of ask a question about this. How resistant do you think banks are towards this kind of stuff, right? I mean, because it seems to me that they don't want to re-engineer their processes ever, right? Okay, I'll give you an example. I just went to Bank of Baroda, right? This was about 5-6 months ago for like some stupid family thing. We have a couple of accounts over there. I needed to get some money out of some accounts, so I wanted to withdraw cash. I had to get a check, get it done, give it to one person, take it to another counter. That person gave me a counter and then like a token, and then the third person gave me cash. This happened 6 months ago, right? So, and this seems to be the same process that I've been going through at Bank of Baroda since I was in school. So I'm going to guess that they're not very receptive to changing stuff around that much. So do you think that that's going to be a challenge? Because again, I mean, like, unless you create a new bank, you're going to want to have banks implement the 5-minute systems, right?
So I think, interestingly enough, in India, the banking system is kind of two-tiered. Mm-hmm. You have really well-run private banks. And I think there are a number of these banks like RBL, Yes Bank, Kotak to some extent. Even SBI, by the way.
Yeah, is doing a bit of
is embracing,
stuff,
So I think they are very competitive banks. And they are partnering with a lot of these fintechs. Very interesting. Right. In fact, none of these fintechs have money on day one to lend out. Yeah. So they typically have somebody like one of these private banks lending money, behind them at the end of the day. I think the public sector banks are so embroiled in their own bad loan crisis that they don't have really the bandwidth to think about digitization or anything.
True.
Okay. Although Bank of Baroda, interestingly, is making some steps in this direction. But I think the rest of them, I think there'll be value migration. Yeah. People will just move from these old banks to this private sector. Yeah. And that will just keep happening over the next decade.
That's an interesting segue into what I wanted to ask next, right? The people who are moving, or the people like you and me maybe, who are choosing to work in with these new fintech products, are essentially people who are, of course, impatient and can't deal with anything more than 5 minutes, but also people who are willing to sort of take a risk with their core value system, right? So their core value system is not rooted in these older financial institutes. It's with brands and products that they believe to be trustworthy, and they believe that this speaks to me in a certain way, and I have understood it. I am well informed. It's transparent to some extent, and hence I believe in using that product and service. So this feeling, of trusting these new age services, you think it's something unique to this generation, and it's because of these other the other things that are happening around them. The fact that everyone has a phone, they have access to information on the fly, they can verify sources, they don't need to be sold a brand through regular distribution channels, which brands of an earlier era are still stuck to. So what's your take on that? I know you earlier mentioned this phrase called the tyranny of distribution, which traditional brands sort of hold in India, but that's also getting disrupted. So is it changing the way in which these things are getting more success?
I think it is changing at a pace which is so fast that people won't, at least the incumbents won't see this coming.
Yeah.
Right. If you see the history of online transaction adoption, whether it's e-commerce or whatever, we've seen almost 100% correlation between growth of broadband and growth in e-commerce.
Right.
We saw that in the US, we saw that in China, and we will see it now. Indian people, they were buying smartphones, but they were afraid to switch on data on their phones because just the plans were kind of gimmicky, right? So there's a teaser price, and then suddenly all the money is sucked out of your account. Jio changed all that. Jio launched in December 2015. Before they launched, the broadband penetration in the country was about 100 million. It's already 397 million and growing. Jio managed to crash data prices by 90%. India is the cheapest place in the world for a data connection, right? And now Jio wants to disrupt even your landline, right? So I think it suffices to say that we will see full penetration as far as broadband is concerned. So typically there's a lag effect from the time people start experiencing broadband. That means, they consume content, they communicate, and then they start to transact, as you said, based on trust. Right. So what we are seeing is a lot of brands that are getting discovered first time on the phone.
Right.
And these are young people. I'll give an example. My maid, who comes in the morning, she cooks. Once in a while, her daughter will call me if the maid can't make it. And she speaks in perfect English. Very good convent accent. One day, she told me that, I made Thai curry with my mom. I said, how did you learn? She said, on YouTube.
Wow.
I said, can you send me a link? And then I made it with my wife.
Wow.
Right? And that YouTube video was made by somebody in America.
Yeah.
So what we are seeing ultimately is, one is you're going to see the convergence of tastes across the world. Right? Whatever becomes fashionable in New York will become fashionable here very, very quickly, because the discovery aspect is completely gone.
Right.
As in, there is complete democracy. Right? That whole access, I'm the elite, I have access to certain goods and services which you don't, it's gone completely, number one. Now, this has very far-reaching implications because, I would say if you look at the consumers, a lot of the incumbent brands, these consumer wars were not won in the hearts and minds of consumers. They were won on store shelves.
Yeah, just by blasting it in your face.
Yes.
Yeah.
So even if you're a young startup, let's say you're making some kind of a jam or a sauce or whatever, right? You have to pay listing fees to go and rent that store shelf, right? Then you give 30-35% away. Then you're stuck on a 100-day credit cycle, right? And then you have to spend money on branding.
Yeah.
How will you survive? So that's why you saw no innovation happen in FMCG, which is now changing very, very quickly, right? So what I'm really talking about is the rise of the digital native even in India, right? Which is going to be very disruptive because it will create space for a lot of new brands to emerge, digital and consumer goods. And that's an area we are very, very interested in.
Yeah, and you've already done something in that area as well as an investment with Blue Tokai.
Yes, so Blue Tokai was our first investment actually in the consumer goods space.
Right.
Physical consumer goods, you can say. So Blue Tokai is very interesting in the sense that it is a manifestation of a subculture of, I would say, coffee purists.
Correct.
Who did not till yet find expression.
Yeah. You can't get good coffee. Before Blue Tokai, there was no good coffee in India.
Right. And now, even in Mumbai, there are so many lovely little roasters.
Right.
They are beginning to come along. Okay. And so I would say, then there are subcultures of people who are like, sort of, I would call them co-creators.
Mm-hmm.
So somebody will help you make your food a little bit faster.
Mm-hmm. Yeah.
Right. You're going to see a clean food revolution, which is already beginning to happen.
Yeah.
Right. So I think what really happened, interestingly, in 2008, it just eroded the trust youngsters had on their parents' institutions.
Why was that? What happened?
I would say that this is more a mood in the West.
Mm-hmm.
Because, they were always taught you study hard, go to the Ivy League schools, do all of this, stuff that your parents tell you to do, and you will prosper in your adult life.
Right.
And that was no longer true. You got fired, you don't know when you're going to get a job again. So we are seeing in the last 10 years a dramatic shift in what we want out of our lives.
Right.
The younger, I would say, generation. So
that ties in well to your earlier point about global villages, right? Yeah. Our culture is all kind of flattening out.
Yeah. So I think that there is this loss of permanence, that is there. I don't think that younger people are learning to live more in the present the way a yogi will tell you to live in the present, right? Yeah. But I just think that they've kind of a little bit jaded, and that's the sense I get, right? It's also a little bit idealistic. That's the sense I get. They're very affected by what other people think. So today, Rotten Tomatoes, for example, can change your, box office numbers.
Yeah.
Zomato can make or break your restaurant.
Yeah.
Right. So these reviews are becoming so powerful right now.
Right.
So peer reviews, new brands. I think people are very open-minded right now in this moment of time.
But they're actively also choosing these newer ones more, or at least you feel the affinity towards these newer sort of brands is a lot more than your affinity to any other traditional brand, right? In fact, another sector, while you mentioned clean food, going into is also clean energy and what's happening in the electric vehicle space or the electric scooter space. I was at Ather the other day in Bangalore. I took a test ride on the day they launched.
How was that? Yeah.
It was so fun. It was amazing. You can't hear the thing. You're driving around on the street and you literally no sound because all you can hear is just the nice jet engine sort of noise when the when the motor spins up, right? So and of course it's clean, and as a new age person, you believe in the whole story that, hey, you should not ruin the earth, right? The past people have that whole distrust in other brands, which you're just talking about, is because our previous generations have ruined the earth, right? And so on and so forth. So that's also part of this whole extension of this thought process.
So apparently Shiladitya is one of those millennials you were talking about. But
no, I'm not. I try to be. I try to act like one. But
sorry, I didn't mean to jump in like that.
Oh, look, we are betting on these guys.
That's true.
500 million of these guys, right?
Apparently.
All armed with phones.
Yes. But all of that, all of this, enabling this, and of course now this is where your investor hat comes in. Enabling this requires you to deploy obviously large amounts of capital with its associated risk. Has this been the way the guys who are being disrupted today, is that how they also started? Or
look, I think it kind of starts with a point of inflection, right? I always believe that we are perpetually crossing, these crossroads. And sometimes we don't know that we are at the fork of a very important situation, right? It just kind of passes us by, right? When the telecom crash happened in 99, 2000, that 2002, people saw crash.
Yeah.
A really bad crash, right? Telecom stocks going down by 99%. Somebody else saw the birth of broadband. And that was really the time when Google really took off.
Yeah.
Right. People saw demonetization, as destroying the sanctity of the rupee and everything. Somebody else saw digital adoption.
Yeah.
So that's a very important point of inflection for, adoption of digital money. Something very interesting happened in the electric vehicle space. A few months ago, the government said electrical charging of electric vehicles is no longer within the domain of only power utilities, but it's a service.
Mm-hmm.
They put it out there, and I was surprised it didn't get much more coverage than that.
Mm-hmm.
So the last big barrier, regulatory barrier for the launch or growth of the EV space just went away. So earlier, like supposing I want to convert all the gas stations in the country to EV charging stops, I couldn't do it because there had to be a power utility like BEST. They needed that license. That went away. It got changed. That's what I was waiting for.
Nice.
Right. Now, of course, there are other issues like, in terms of, battery life and, electric batteries, all of those things. But the regulatory part is done.
Yeah.
So the way I see it, I think in the coming years, you're going to see complete, utter disruption of the two-wheeler space, particularly.
Interesting.
You're going to go from a very highly controlled and oligopolistic market to something what I call an auto appliance market.
Awesome.
Because let's say you and I decide, somebody gives us $100 million and say, let's go make a electric bike.
Yeah.
Right? So you have to go find a bunch of these guys, who will make this part, etc., etc. I mean, let's say it's an IC engine, right? So then I'm kind of stuck with the existing ecosystem of auto part suppliers. Who will say, I'm not going to retool for you unless you're making 1 million vehicles.
Correct.
Right? I'm going to go to China, I'm going to get all these parts put together, I'm going to customize a little bit out here.
Yeah.
That's it. The barrier to entry is just collapsed.
Yeah. It's China is the AWS of the real world.
It's the AWS of the hardware world. So we are going to see a few hundred two-wheeler brands in this country in the coming years.
Wow.
Yes. A few hundred.
Yeah, I'm sure. And
Of
India,
all shapes and sizes.
Yeah. We're already the largest two-wheeler market, Like India is one of the largest
Is it
two-wheeler
China?
markets.
I don't know.
I do not know the answer to that question.
Jonathan
China's
was here on that earlier, and that's where.
China
Oh,
is
yeah,
the
I think he did
largest.
mention that, didn't he? Yeah.
Yeah.
So this is going to happen very fast. It's happening in the east of India right now.
Mm-hmm.
A lot of little shops coming up. People near Calcutta, wherever, they're importing, putting together, electric bikes and selling them.
Interesting.
Selling them online.
Since you mentioned bikes, I remember earlier, a long time ago, we chatted around bike sharing.
Yeah.
Also.
Yeah.
Right? And at the time, I remember I was fairly skeptical about how India could even adopt that sort of technology. And I know you were in China and you came back and said this is going to happen. And I think it's happening. Do you think it's happening already?
Yeah, I think it's not happening with bicycles as much, but there are companies which are getting funded just to do scooter sharing.
Yes.
See, I buy scooter sharing. Bicycle sharing, it just never made sense to me. But motorbike sharing or scooter sharing, I buy that 100%. I just feel like for something to make sense for sharing, the value of the product needs to be higher than the value for bicycle. The way I just kind of look at
You're a lazy millennial, Amit.
I am.
You just don't want to pedal. You just want the thing to move on its own.
Well, okay, I am lazy in that sense, but
You also need very brave millennials to cycle on these roads.
that too.
As if scootering on the road is any easier.
That too, okay. As if driving on the road.
So there are a couple of
easier.
companies that have been funded. There's Metro Bikes,
Yeah.
funded by a bunch of VCs. And there's another company called Vogo,
Yeah.
Which is doing something very
There's some
similar.
Lulu bikes. That's some.
No, Lulu, I think, is maybe a cycle company. These are all scooter companies. And there's a third one, I forget their name, which I think TVS is involved with them. So there are three, but I'm surprised more money has not gone in.
Yeah.
So we'll see.
Interesting. So we'll all hope to look at these new spaces and see the change happening in India, where obviously you've been a proponent of the fintech change and you've been lucky to be involved, I would say, in some key places there. We look forward to seeing you do more stuff in these direct-to-consumer brands. And on that note, if someone wants to reach out to you, maybe say hi on Twitter or anywhere else, do you want to do a shout-out to where people can reach you?
Twitter.
So your handle.
Lemon and Ice.
Let's answer now. Why that handle?
So I created my Twitter handle in Brazil
Interesting.
because I was hanging with some friends of mine, and every time we ordered a drink, my buddy would always say, "Com lemon, com gelo." So I said, "What is that?" He says, "Lemon and ice." And he would say it every time. And I got addicted to the same thing.
Interesting.
And one day over drinks, he explained his perspective to me. He said, life is a little bit better and a little bit refreshing. That's my view. That's who I am.
Wonderful.
So I said, okay, I'm going to borrow that from you.
So
It's bitter, it's fresh, everything.
So you heard it here, guys. Reach out to Vikram on @lemon&ice on Twitter. And if you're building something cool, say hello, of course.
Sure,
and
absolutely. I'll always give you an audience if you can reach me.
we are lucky to have you here. Thanks so much for doing this, of course.
Everybody, just a reminder, please sign up for the Slack channel. You can go to ivmpodcast.com/Shunya One, or there's a button saying sign up for Slack. Press that button, send us your email address, and we will send you an invitation. Also, please remember to do some reviews or ratings wherever you're listening to the podcast. iTunes is a great place to do it. Salvin's a great place to do it. Castbox is a great place to do it. Just wherever you're listening to it, please do some reviews for us. Thank you.
Yep. All right. Thanks so much for
Thank
doing
you,
it.
guys. Real pleasure being here today. Thanks.
Yes, thank you.
Did you know that Parsis in Mumbai, instead of being left at the Tower of Silence after they die, are now cremated? And why? Because a cow fell sick in the early 1990s. Did you know that the smog in Delhi is caused by something that farmers in Punjab do and that there's no way to stop them? Did you know that there wasn't one gas tragedy in Bhopal, but 3? One of them was seen, but 2 were unseen. Did you know that many well-intentioned government policies hurt the people they're supposed to help? Why was demonetization a bad idea? How should GST have been implemented? Why are all our politicians so corrupt when not all of them are bad people? I'm Amit Verma, and in my weekly podcast, The Seen and the Unseen, I take a shot at answering all these questions and many more. I aim to go beyond the seen and show you the unseen effects of public policy and private action. I speak to experts on economics, political philosophy, cognitive neuroscience, and constitutional law so that their insights can blow not only my mind, but also yours. The Seen and the Unseen releases every Monday. So do check out the archives and follow the show at seenunseen.in. You can also subscribe to The Seen and the Unseen on whatever podcast app you happen to prefer.
Long, long ago, not in Bethlehem, but in a place nearby, there was a wonderful birth of a huge show, which I like to call Cyrus Says. A show that encapsulates everything in human history, from the first Homo sapien to the last Homo sapien, who's traversed the entire world and then come back to India. This is a show which tells you everything about everything. If you want to know, avoid Google, come to us. It's called Cyrus Says. Get new episodes every Monday and Thursday on the IVM Podcast app, website, or wherever you get your podcasts from. It's simple as A, B, oh God, what comes after that?